Frankly speaking, this trade was crazy. Just look at this. Now that I have returned from work, price do reverse from my entry. And I just think like, how many pips? 10 pips to hit my take profit. And the price reverse and go and stopped me out. I just took this trade right now. Today is 14th January 2026. So the reason behind this trade is that sometimes the way I take the trade is just beyond imagination. We are in the bullish market because yesterday I was expecting some kind of shift in the price action, but I didn't see it. We are in the bullish market. Price swept the liquidity below these lows and then go and break structure. So this structure breaks this BOX that we have. If we go into the 1 hour time frame, it is a body breakout. If we also go into the 4 hour time frame, it is also breakout. So this is the 4 hour point of interest. This is the 4 hour demand zone. Okay. But the reason behind this trade is that after BOX, what are we expecting? We expect the price to pull back because yesterday price swept the liquidity below these lows. And then we have this substantial move upward and break structure with the body of the candle. So after BOX, we expect the price to retrace back. So during all of this morning, we have a very strong bullish engulfing candle. So we expect demand to step in and keep on pushing the price. But you can see there wasn't a buying opportunity. There wasn't buying momentum in this price action right now. So if I go into the lower time frame, that is 15 minutes time frame, what you can see is that price created these highs here but this is where you can see it clearly in 5 minutes time frame. Okay, 5 minutes time frame. Sometimes there are traders who try to trade this kind of pullback. Immediately they see this bearish momentum, price drop. Okay, so that is where we get something like 5 minutes market shift somewhere around here. So this market shift, this is a clear confirmation that the price is pulling back. Okay, well, so this morning I was watching this price action. Sometimes what we may be thinking is this price is just consolidating. Okay, this is a consolidation market, but when you are reading the price, if you truly know how to read the price, you can see it's not really that consolidation, but everything can happen. This is a low probability, very, very low probability. Since I'm trading against the high time frame trend, this is a low probability. This is a pullback trade. Okay, but the reason behind this trend, just explain the reason behind this is a low probability. After this shift, this is where we get 5 minutes shift. So there is this bearish supply zone here. So price try to retrace back to supply zone, and looking at the reaction here, a lot of sellers try to short the price here. Just look at this. They try to short the price here. And all of these sellers, the question is, if they enter the sell position based on this supply zone, where do they have their stop loss? Above these highs. Okay, so this is how they were trading. So I waited for the price to sweep the liquidity above those highs. That is where I enter the trade. So this is the logic behind this trade. This is a very, very low probability because looking at the price right now, price can mitigate this demand zone and continue with the uptrend. Everything can happen. But this trade, I'm just risking $1,002. This is the reason I'm just risking just 600, just 60 pips, just small pips. Okay, but let's see how it goes. This is a low probability trade, but this is the logic behind this trade. Because of this strong liquidation above this resistance, this above these highs, this is the reason why I entered the trade. And I'm just targeting 1:6 because if I go into the 4 hour time frame, the price is not that clean or clear. This is a strong 4 hour demand zone, so I'm just targeting this demand zone for in case if it is pullback, if the price is going to use this liquidation to pull back more further, that's where I take the advantage. But let's see. So you can see now I'm about to go to work. If you look at this trade, there is high probability price will continue with the bullish trend. There is high probability because the reason behind this is that price retraced back. Okay, I took the trade here. Price retraced back, swept the liquidity below these lows. And looking at even 5 minutes, this is the liquidation that we have. You can see, as I said, this is a low probability because of the higher time frame is bullish. This is a bullish market. So I probably just swept this liquidity, but there wasn't enough sellers to push the price. I was expecting a body breakout somewhere around here. So I was expecting a body breakout. So since price breaks through this last internal low with the wick of the candle, this is a liquidation. After that, what you can see is that there was a demand zone here, and immediately price mitigate this demand zone by a step in. So price retrace back and sweep the liquidity below this low. So this is the liquidation that we have. Liquidity. So after this liquidation, this is where price retrace back and mitigated this demand zone. Okay, that's where the liquidity. So there is a high probability price is going to stop me out. But so the question is, if I go into the one minute time frame, this way we have the shift after the liquidation. So this push is going to stop me out, but my rule stays the same because I'm just risking $1,000. Immediately I enter the price, it's whether I stopped out or I hit take profit. So I have nothing to do, though. Right now, whatever the price is telling me, I can close the trade right now to avoid this loss. But if I do that, this where price is going to stop me out. But if I do that, I'm not following my rules, because no matter how the market is, immediately I enter the market, though I know I'm going to get stopped out, but I need to accept it. So I'm just risking $1,000 and so be it, because within 3 days I make to almost 25,000. So risking $1,000 on this trade is absolutely nothing, because I was risking $1,000 for 8,000. So this is my risk reward. They are crazy. So I accept this loss no matter how I'm going to get stopped out, but I have accepted right now. I need to go to work. Now, this is crazy. This is unbelievable. This is the reason why I always follow my rules. I never close a trade unless the market hits me out. I was thinking like I was almost stopped. I was thinking like I was almost stopped out. Just look at this. Now I just came back from work. Now I just came back. Now I just go for break and just to check my chart. Just look at this. Now this is crazy. This is crazy. Just look at this. This is actually crazy. I thought like I was almost stopped out, but this all about trading. It's about being disciplined and trust the process no matter how, and also accept when you are wrong. Just look at this. Wow. So we close this trade. If the price hit take profit, that's why we close 8K. Just look at this. This is crazy. Frankly speaking, this trade was crazy. Just look at this. Now that I have returned from work, price do reverse from my entry, and I just think like, how many pips? 10 pips to hit my take profit, and the price reverse and go and stop me out. Just look at this. It's crazy. By the way, I lost this trade, negative 1,002. So I was risking 1,002 for 8,000. But you know, trading is always about accepting the risk. Just look at this, how everything happened. So this is all about trading. So it is about always accepting and taking the full responsibilities and accept the loss, because losses are part of the game. Because this trade sometimes is crazy because of, you can see I enter here, price drop almost, I think from here to here, 370 pips. Then I was targeting, 400 pips. 370 pips, just 30 pips left. Price reverse and stop me out. This is all about trading. It's always about accepting all of these things, because that is the market. Try to control all this kind of emotion, then everything will be all right.